hit that record button. We're about to get into it, y'all. So we're talking about very concept focused. What a Fry Daddy, you came in a little late, but gotta say what's up to the man. And this is a class that was inspired from my mentorship and from teaching and from one-on-ones. It's come to my attention and my awareness that because there's so much information out there and there's so many methods, it's hard, right? It's hard to pick your direction. It's hard to find your path as a trader. It's hard when you're coming in and there's so much thrown at you to decipher how to maneuver, what to bring in, what to throw out, what to leave. So this is big on concept. And my goal is for this class is to help people who feel like they might be stuck with, I don't know what I'm doing with my strategy. I don't know what strategy to use. I don't know what I'm doing half the time. I have no sense of direction. The goal is to help you get unstuck and then start moving in the right direction. And of course, I can't physically get you unstuck. You have to do that, right? You have to take what we talk about, ask questions, dig deep with yourself, and go from there to get yourself unstuck. So, right, what we're going to do is I'm going to go through these 5 things I put right here. Pop, pop, pop. Filter, pick one, filter, back test. Cool. All right, I'm going to just talk about these and I'm going to show an extreme example, or not extreme, just a real example of what I think would make stuff a lot easier. So, kicking it off, right, when we're looking at strategies, right, and the topic of this class is choosing and improving your trading strategy. When we're looking at that, you want to think about what your goal is, right? We talked about this before, right? The person who's trying to build $1 million account is trading differently than a person who's trying to get $400 to pay their light and their gas bill. You know what I'm saying? It's completely different trading styles, right? A person who has, a business that's an online business that they can work whenever they want to work, and they have the time to sit in front of the computer and look at the charts during the day, versus somebody who has to go into an office that has a strict policy on cell phones and screen time and things like that. They're trading 2 different ways, right? So first and foremost, for whatever your time allowance is, and for whatever your goal is, you have to make sure that everything you do is in alignment with that, right? So that's where you're looking at, am I swing trading? Am I long-term trading? Am I buying options? Am I selling options? Right, that's where you're gonna find that path to see which way ultimately you wanna go and which way you need to go. And everything else outside of that needs to be shut out. If you know you go to your job and you're at your job from the time that market opens to the time that market closes, and you have a 30 to a 1 hour lunch, and that's it, and you can't be on your phone checking alerts, and I'm not talking Discord alerts, I'm talking price alerts that you set on TradingView. If you know that's your position, then day trading, scalping, that pretty much needs to be out the window. You can scalp on your lunch break, but we're gonna leave that alone, right? Seriously, swing trading needs to be what you focus on, and that's it, right? Because when you throw in all this extra stuff, it's clogging you up. And there's only so much that you can have in your head, in your mind space at one time that you can actually work with, right? You think about anything that you do, you're not going to be able to get 100% of a result if your focus is spread out across 30 different things. So if you're trying to swing trade and you're wondering why you're doing kind of bad at swing trading, look at yourself and see, am I 50% in swing trading, and then 30% of my head is in day trading, and then 20% of my head is in scalping? And I'm trying to keep up with people that are live trading, but I'm at work, and so I can't really do the live trading, but I'm still gonna get on the live trade and try to live trade. Oh man, I got this meeting coming up in 10 minutes, but now I'm in this trade, it's down 20%. Should I close? You don't put yourself in that situation, right? You want to start working a way around that. And so your research, your focus, your notes, your planning, your strategy is all geared towards that, right? And it's the same thing on the flip side. If you know that you have downtime, you know that you work part-time and you work 2 days out the week, right? Maybe you decide you want to day trade just those 2 days out the week. Your goal is to day trade those 2 days to make money you don't got to trade no other day, right? You don't got to worry about swinging, right? In that case, you can focus on day trading. But regardless, if you want to do both, you need to focus in on one, get it down before you move on to the next thing. Otherwise, you're going to be moving yourself in two different directions, wondering why you're not gaining any ground on either side. All right. So give me a 1 in the chat if that makes sense. Give me a 2 if that's confusing. And if you have a question, we'll pause for a second, address the question before moving on. Give me a 1 if that makes sense in the chat. Give me a 2 if that's confusing. I want to make sure, as always, this stuff is sticking and is making sense and is helping. And again, trust that like this is because I see it a lot. And I want to make sure that y'all not just please don't get off this Zoom and not take any of this stuff and put it into what you're doing. Please don't. All right. Okay. So focus on one, hone in on that. Once you have that down, then you move to the next thing. Right. Now it's the same thing when it comes to your strategy. Right. And if you've been in the Discord, if you've been a trader, period, you know there's tons of different strategies, and it's something we're going to come back to in the Zoom. Tons of different strategies, tons of different indicators, just tons of stuff, right? If we come look at indicators on TradingView, all right, we see these are a bunch of indicators people have created. These are a bunch of indicators that are just regular indicators, right? And so on and so forth, right? So there's no way realistically that you can use all of these. Right? You can't, right? There's no way. But if they didn't work in some regard, or if they weren't capable of being used in a successful strategy, chances are they wouldn't exist. I don't know what SBS algo is, but if SBS algo was a garbage thing, chances are this person wouldn't have put it out there, right? So in that, whether it's the strat, whether it's fibs, whether it's RSI, whether it's MACD, whether it's Bollinger Bands, whether it's ATRs, whether it's whatever, ADX, whatever it is, with that strategy, pick one method and then test that method, right? You, again, same concept, right? You are not going to be able to make true progress in one direction and see true results in one direction if you do 1 day of strat trading, 1 day of trading based on the fibs, 1 day I'm trading EMA crossovers, then this day I'm trading the oversold RSI, this day I'm trading Bollinger Band bounces. How do you even know what works best for you? You don't, right? You don't have any data to support it. You haven't taken enough trades to support it. You haven't seen enough of on your mental side how it affects you. Because trading with the strat versus trading with fibs versus trading with EMAs versus trading with the RSI versus trading with the Bollinger Band, you're going to get different results and different fluctuations in there. All your stop losses are going to be different. All your levels are going to be different. And so all that stuff is different, right? The amount of drawdown you can take on is going to be different. So if you're stuck in the spot of it's all this stuff, there's all these strategies, there's all these indicators, I don't know what the heck to do because it's just a bunch of stuff. Pick one. If you can back test it, all right? And when it's back testing, what that looks like is, simple example would be if you're trying to create an RSI-based strategy and you're not using fancy back testing software, I'll take this moving average line off my chart. What that looks like is if you just say real simple, I'm going to go long on SPY when, this is a simple way to look at it. I'm going long on SPY when it goes under the 30 on the RSI, right? And I'm going to look at what happens if I hold it for 2 days. All right. And so then you can come and say, okay, so here's my buy day, right? Here's a buy signal here. Another buy signal comes here because we crossed back below, right? And you can go through and say, okay, if I bought it, I would have went up $3. I would have went down this much, right? This move happened in this span of time. All right, this one would have been a loss. This would have been a win. This would have been a loss. All right, same thing with the Bollinger Band. And we're creating these strategies and putting stuff together. Then you can say, okay, well, cool. I'm gonna do a Bollinger Band and RSI. Right. So now I'm looking for when the RSI is oversold and when the stock is outside of the Bollinger Band and then crosses back into the Bollinger Band. And that's my entry to go long, right? My stop loss is going to be, below the entry candle or the low below the entry candle. It could be half the ATR below the entry candle, right? And then my take profit is the 20-day moving average, or however you want to cut it, right? You can look at this. This would have been a win. Same thing here. Oversold on RSI, came back into the Bollinger Band. It didn't come back to the 20 EMA or SMA until down here. That would have been a loss, right? And so you can go do that. And you can go through this and test out this exact strategy that I'm showing you right now. You can test. Ooh, I'm trying so hard not to cuss because I want to, but I'm really hyped. You can test this out right now, tonight, tomorrow, Sunday, and you can go through 6 different strategies and come Monday morning when the market opens, or if it's a holiday, I don't know, somebody says a holiday or whatever. But next time market opens, you already know, hey, man, that RSI Bollinger Band strategy, that mug dope. Or, man, that mug don't work on a 1 hour on SPY. But I looked at the 2 hour, and it was turned on a 2 hour. That mug, woo, you know what I'm saying? We're going to lose some, we're going to win some, but those wins are going to be a lot better than the losses. Oh, snap, let me look at this. What if I didn't get out at the 20-day moving average? What if I got out when it hit the upper Bollinger Band? Does it change? Right? What's the timeline that I'm in these trades? Right? Hop in the member-to-member channel. They sharing strategies. So my point is, right, test the strategy out. Again, EMA crosses, fibs, Bollinger Bands, RSI, MACD, whatever you heard from somebody on Twitter, Instagram, YouTube, MySpace, whatever you heard, test it out, try it out, give yourself a week, give yourself 10 trades, give yourself a decent pool of data to actually get real results to see how your trading goes. And then you can know immediately if that's a strategy that's going to work for you. Because if you're going to plan on trading for the next 4 years, then it doesn't make sense for you to go the next 4 years confused about what the hell you're doing. All right. Take you a month, take you 3 months, even if it takes you a year of testing different stuff out. And then you got 3 years of having straight greatness because you know exactly what you're doing. That year is worth it to test these stuff out. But with these strategies and with back testing, is why I talk about it so much, is because you can run through 8 different strategies right now and not have your money affected at all. You can come right now and be like, yeah, man, I tested out MACD crossovers on SPY, and that mug was actually pretty whack, bro. So now I know I'm not going to spend no money in the market testing MACD crossovers. Marilyn asked, can I explain why the 2 hour worked and not the 1 hour? That was just an example. The 2 hour and the 1 hour probably are great for that strategy because of how that strategy works. But that's an example of flipping between timeframes and filtering out stuff to see, what works and what doesn't, right? So pick one, test it, back test it, right? And like I said, we're going to go deeper into back testing. I want to show you guys something with that too, right? Log in your trades because that's tying directly into your strategy, right? But if you're doing, 4 different strategies where you're doing EMA crosses and you're doing Bollinger Band bounces and you're doing RSI oversold and you're doing head and shoulders and you're doing wedge breakouts, which isn't bad if you've gotten used to doing those things. But if you're doing all those things initially and you're still in your learning phase and you haven't logged to see the actual results, if your account doubles that month, you don't even know why it doubled. You're happy it doubled. We're glad it doubled, but you don't even know what contributed to that. All right. Was it that lotto earning that you played? Was it the wedge breakouts that you played? Was it the strat trades that you took? What was it? If your win rate was 80%, was it the strat trades? Was it the Fibonacci trades? Was it the EMA trades? When you log it, you can see, damn, my EMA trades were garbage. but these strat trades were great. Or my strat trades were bad, but my EMA crossover trades were great, right? And those things, because the technique or the strategy is never the problem, right? Is never the problem to a degree. To a degree. It's always the person, right? So that's just like, and I don't know how else to put it. But it's like, not talking on politics, but like gun control, right? Guns aren't the issue. It's just a gun. It's just a thing, right? When they get with the wrong people, it becomes a problem. Money isn't a problem. When it gets into the hands of greedy, power-hungry, controlling, manipulative people, it becomes a problem, right? It's the same thing. The trading strategy isn't the issue. The issue is you're not taking the time to fully develop into this trading strategy, make it your own, test it so you find a way that works for you and run with it. All right. You're like, oh, dang, he did that. Let me try that out. Oh, I lost the trade. Well, that don't work. Let me try something else. Oh, I won a trade. This must be it. I lost the trade. That don't work. Right. Without taking into account, okay, well, I lost that trade, but was it because I had a too tight stop loss? Was it because it showed me that I needed to get out and I didn't get out? Or was it just a fair loss, right? I'm not going to win every single trade. So, right, pick one strategy, try it out 10 trades, try it out a week, try it out a month, log your trades, and throughout that time period, adjust and improve what you're doing, right? Adjust your entries, improve your exits, all of that, right? So we're looking at trades and we're seeing that whatever we're trading has us get puts right here. And then we get out right here. And there's all this move left that we could have had. And that happens again, right? Next time, oh, it says get puts here. All right. And then it has us get out here. And then there's all this other downside that we could have took. Look at what's causing you to get out, right? If we're getting a signal for puts here, but then we're getting out here, and then it drops, and we're like, dang, right? What a part of like your strategy caused you to get out? Was it truly a time for you to get out, right? So that's big difference, right? That's what's going to make a huge difference, is giving yourself time to let this stuff happen. And then, I'm about to put another one on here. Rules. Don't nobody like rules till it's time for the police to come save them. Bop, bop. Right? So that's what you need to look at. And I see somebody in the chat saying they get out super early and take losses, right? And I see some more stuff in the chat related to that. So that's what you need to see is, okay, what's going on where I'm getting in here and I'm getting out right here, and then it flips in my favor. Why, right? And so if you're trying to conserve your account, then that means we're gonna get to it. We finna get to that too, right? Then that means that you need to look at improving your entry. Maybe you need to delay it. If you notice that, I'm gonna say this, preface this with a lot of times trading gets a lot easier when you think about stuff in the most logical, simplest way possible. If you know that every time you get in a trade, you go down 20% before you go positive, you're getting in too early, or you're getting in late on the move and it's pulling back, right? So you need to go look at your trades and see, what am I doing? Am I getting in on a breakout and then it's pulling back? And because I'm down 20% and I'm looking at my P&L instead of the chart, I'm down 20%, closing it at 20%, and then it flips back. Oh, I got in puts, but then it started bear flag, and we know bear flag is a consolidation that will start having the stock move up. So if we know bear flags are structured like this, right? And we got in puts, and then starts moving up and sideways, and we get scared, not knowing it's a bear flag, which we're looking for a continuation to the downside on the break, then you get out. We're down 10%, we get out. Then embrace the bear flag, and you're like, damn, I knew it was going down the whole time, right? That's where you have to look at yourself, look at your trades, and that's where you keeping that log is going to help you. So with your log, And after I say this, I'm gonna pause. With your log, you want to make sure you're writing down what trade you took, why you took the trade. I'm gonna slow down. What trade you took, why you took the trade, when you took the trade, as in what day, what time, so you can pull it back up on the chart. It helps you to put in what your plan was going into the trade, so you can look back on your thinking and your thought process. And then you want to include your exit, why you exited, when you exited, and if there's a specific strategy that you used for that trade, so that you can go back and you can see across all my strategies. And I would say include drawdown. You can get deep with it. Include your drawdown. This one went down 10%. This one, most I saw it go down was 30%. All right. And so then you can see with your strategies, oh, you know, it's not just the fact that the fibs suck, is that when I'm trading, regardless of what strategy I'm using, I get in and I'm immediately down 20%. It looks like I'm getting in too early. Look at what stocks I'm trading. I get in and I'm immediately down 20%. What stocks am I trading? What are the spreads on these premium prices? All right. So that's where you got to look at it. So I'm gonna pause. One's in the chat if we good, if we rolling, we making sense. Two's in the chat if you're confused, and I will pause and take a question. Screenshot the chart, take notes on why you got in and when you got out, so you can ask, review, so you can review or ask specific moderators questions on how to improve. Yep, absolutely. Annotate your charts. Annotate your charts. How many touches the candle has to Terrence? Ask a question, bro. How many touches the candle has to make before we can anticipate a reversal or continuation? That's my problem. I get out too soon. All right. So there's different ways you're looking at your reversals or continuations, because you have reversal chart patterns. You have reversal candlesticks, right? Inverted head and shoulders is a reversal chart pattern, right? The stock was moving bearish previously, and then it flipped into bullish price action. Continuations would be like a bear flag, right? Like we just looked at. Bear flag is a continuation. It's going down, started having that upward consolidation, and then continue to move down, right? So that's going to vary. You have reversal candlesticks as well. That's where you have your, your hammer candles, where you have your dojis, or your candlestick formations like morning stars, evening stars. So with how many touches a candle has to make before you can anticipate a reversal or continuation, that's going to vary when you switch time frames, right? So I'll say this is the easiest way to look at and have a clear understanding of reversals for me would be assessing highs and lows, swing highs and swing lows. And then of course you scaling out on the time frame makes it a lot easier. All right. So when I'm trading, usually pivot points high, low is the only thing I have on my chart most of the time. And the reason is it lets me see the highs and lows that get put in. And we know that the market moves in, swing movements, right? We have this move down, and we have this swing up, right? Have this swing down, have this swing up. We have this swing down, right? We have this swing up. So when you're identifying trend, you know that your trend is up when you're getting higher highs, higher lows. You're getting lower highs, lower lows, then you're trending down, right? So this low, this swing low is higher than this one. This high is higher than this one, all right? So the trend at this moment is up, all right? When we start going this move, now we're seeing that our swing highs are decreasing, right? That confirms the downtrend. These lows confirm that we're continuing to move down as well. All right. You can also look at candlesticks or trend lines. So I actually sent this to somebody today on SPY, where we were looking at SPY. We was texting this morning while I was on a meeting, and I put this trend line on SPY. And we had, we had this top resistance level, all right? And I was like, hey, bro, SPY about to get active. Like, that's literally what the text I sent said. We might get some action on SPY right here, something like that. Right. And so when we broke this, that's when I was like, okay, we're starting to move trend down, because all the trend line is those lows and those highs, right? And when we broke that trend line, we're now making a new lower low, right? But as far as your touches, usually the rule is 3 to establish trend. You're looking at 3. We're doing a trade log. What are the things that we should look for and document? When you got in, why you got in, what your plan was, when you got out, why you got out, and of course, what you traded. Do a tutorial on TradingView. This is all new to me, how much the TradingView costs. TradingView is free. They do have upgrade versions available. I believe I do have a video on TradingView, but you'll probably be better off looking at a YouTube walkthrough on TradingView that goes more in depth. So I would say that's one that you could YouTube, is how to use TradingView. But I do have a video on TradingView, but I don't know how to use a bunch of this stuff. Like this lock, I don't know what this does. I don't use it. Can we not use indicators and trade confirmations? Of course you can use indicators. You can use indicators. I personally don't use indicators. Like that, I might use it rarely. But you use whatever makes it work for you. All right. So although I don't use indicators with my trading, I'm not against indicators. For the first 9 or really first 7 years of my trading, 8 years of my trading, I was using indicators, and I studied indicators, and I went deep into indicators, and I have a multitude of indicator-based strategies and screeners and all of those things. So, with that, I've just found what works better for me, and just having my chart like this makes me feel a lot better than having 4 indicators on my chart that I'm waiting to line up before I decide to actually get in a trade. But that's me. So definitely use the indicators if you want, right? But just make sure that you're testing them out to see what works best for you. Do I change the settings of that pivot indicators? I usually do 5 or 3, so I get more plots. SPY, think reversal, appreciate you, Friday Daddy, coming through. Kind of sure to set up stop losses on Tastyworks. I use the mobile version of Tastyworks. I don't use the desktop version. But you just go into your trade and you set a stop market order. So however you set a stop market order, and that's for anybody who wants to know about setting stop losses. There's different ways based on your brokerage. On Tastyworks, you're using a stop market. What time do I use for entries and exit? Depends on if I'm day trading, swing trading, or scalping. Scalping, I'm usually on a 5, 3, 1 minute. Day trading, I'm usually on the hour, 30, 15, but I still look at like the 5 or the 1 to time my entries. And then, yeah. So let's keep rolling. All right. Backtest log, creating rules. Huge thing. All right. It's creating rules for yourself and boundaries, both positive and negative, to protect yourself. Right. So what I mean by that is, if you see that you're consistently running into the same problem, or there's a problem that seems to be a huge problem, create a rule to prevent that. I.e., you know you have meetings at work at 11 o'clock. You know that you like trading, day trading, even though you're at work. You say, I'm screwed, I'm day trading, even though I'm at work. Okay, if you see that you're starting to get into trades and you're getting caught up in meetings during the time that you're in trades, set up rules to protect yourself for that. A rule could be, how about I don't take no trades before 11? Cool. Rule could be, if I'm in a trade before 11, I'm getting out. Rule could be, I'm setting a OCO order, or a one cancels the other order, where I'm setting up a stop loss and a take profit on this trade, so that while I'm in this meeting, because I've been there when I was working, when I was working at a job, I was in meetings and I was texting people like, hey, what is Twitter at? What is SPY at? what is this? I'm in this trade, bro. Is it going up? Is it going down? Like I'm texting off my Apple Watch under the table trying to get price updates. So right, create a rule to protect yourself. Right. The outside way of thinking about it, and how I've explained to somebody else before was looking at, if you have a kid that run around the house, they hit their head on something. The rule doesn't have to be don't run. The rule just becomes run outside. Don't run in the house. All right. And so that way you're constructing rules for yourself that are limiting bad or negative things and then are allowing you to be open on the right side of things. All right. And I see some stuff coming through the chat. So I'm gonna hit it. Appreciate you, Friday. Do I trade the first 30 minutes of market open? Usually I don't trade the first 30 minutes. I usually wait till the first hour is in before I start trading, because the first 30 minutes is a lot more volatile unless I'm trading the gap. If I'm trading a gap trade, then I will trade the first 30 minutes. What are my trade rules? Some of my rules that I've created from stuff like this is waiting for candle closes on support and resistance than just a break of an open live candle on support and resistance, right? Because too many times you'll have false breakouts. So really any breakouts, a lot of breakout trades, I wait for the retest majority of the time versus getting the first breakout. And that's because for me, I'm okay with, and sometimes I'll do different where I'll size in and I'll get in on the breakout, then get in on a retest for the continuation. But for me, I got tired of buying a breakout, it pulling back on me, and then it continues to break out, but I'm down or I'm at break even and it's moving in my direction. Whereas I would have got a lot better feel if I had waited on the retest, right, versus the initial breakout. So that's a rule I created for myself, is waiting on that with the support and resistance or supply and demand, right? If it's entering a demand zone and I want to go long, I'm waiting, or regardless, I'm waiting for candle closes, right? So if I see this as a zone where we've been wicking out of over and over again, and I'm gonna find one, I want to find one, for example, I'll be cleaning up my charts too much. So like this, right? So it's supply. If I'm looking at a break on this supply right here, right? Appreciate you holding the chat down, Fry. So that's not an example I want. But matter of fact, this is even better. If I see that we're continuously bouncing out of here, right? Bounce, 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 right? If I was going to go short, I want to see us close in this area where these wicks are at, right? I want to see us close in this area for me to go short. So that's a rule I've created where instead of being like, oh, we're coming back down, or oh, we took out the low of these candles, we must be about to drop. I'm like, I'm gonna wait till we get a close down here to tell me that we're not just wicking out. All right. So that's two examples of just creating rules based on past trade experiences. Scroll back up. So when you use the 2-hour candle for day trading, do you watch the 2-hour candle as the trade progresses? No, I'm not day trading with the 2-hour. So that 2-hour candle I pulled up was an example of flipping between time frames to test out different strategies, and that the strategy itself may work, but strategies are going to work in different forms on different time frames. All right. Just like how a monthly level or a weekly level is going to hold up more and hold more ground and be stronger than a 1-minute level. Right. So that was that. How do I determine which contract to trade based on the chart? Do I use the delta? No, for the most part, for me, I'm usually going one strike out the money or at the money. Right. And so for me, as me developing as a trader, I started learning the Greeks. And then I was like, you know what? I don't think I want to check, especially if I'm going to be like in and out. I don't think I want to check the Greeks for a bunch of different contracts every time I'm about to take a trade. Right. I understand that Delta, I understand Delta is 50 at the money and that is going to decrease as I go further out the money, and it's going to increase as I go deeper in the money. I understand that my odds of success on the trade and finish profitably or finishing in the money are going to be greater the higher my delta. All right. So I know that same thing with expirations, right? I know that the theta, I'm not checking a theta on all these contracts before I get the contract. I know that my theta this week is going to be worse than my theta next week. So if I want to protect myself from theta, then instead of me looking at, oh, well, this theta is 0.23 and this theta is 0.22 and this theta, I'm just getting a contract for next week. Cool, problem solved, right? And that's me personally as a trader, and that's me, right? And so if that works for you, then that's the same thing like we're talking about is, figuring out how to be successful for you with your own development, right? So let us keep rolling. Friday made a great point. What you see when you're back testing is that almost every strategy will work, but it's based on how you use it and the stocks you use it on. And I've done that where I've tested strategies. We'll do it today. Matter of fact, we'll do it right now. So let's do that. Pop. So this is Profits Pie. I've done videos on it, covered it before. In summary, this is a platform that allows you to run scans, screeners, and back tests, which is the majority of what I used it for as I was working on creating strategies with back testing. But there's two key points I want to use this for right now. And that's that you can have the same strategy and get completely different results based on what how you manage the trades. All right, so I'm gonna keep stuff simple. I'm gonna do EMAs because a lot of people like the 921 crosses. So I'm gonna do a strategy that has us buy at the close when 9 EMA crosses a 21 EMA. Right. And this is what I was saying about this happened just with my Zoom with Fry just now when we did our one-on-one. When we started talking about strategies and development. And I told him, focus less on the strategy and focus more on your entries and exits and just managing the trade. Focus on your entries and exits and your trade management. Because the strategy is the strategy, right? But if you don't know how to manage your position, it don't matter what strategy you use. If you don't know how to trust yourself, if you don't know how to mentally handle a trade, it don't matter what strategy you use, you're gonna lose. Right? And we're not even gonna use a sell criteria. Our sell criteria is gonna be based on targets and stop losses. All right. So this is staying, we're starting with $1 million. We're using 10% of the account on trades, 10 trades max, 5 positions max, 1 new position a day. All right, cool. All right, just to get that out the way. So what I'm gonna do is set a profit target of 5% to start and a stop loss of 2.5. All right. So basically what's going to happen is with this test, so you have the background understanding, when we have the trigger 9 EMA crossed above 21 on the previous day, it's going to enter this trade at the next open. And when we have our sell criteria, it's going to exit. Matter of fact, I have us exit at the close when the criteria is met. All right. Boom. All right, so we're going to run this test. How long did it take you to learn price action without indicators? BW is exactly correct. You should learn price action before indicators. And that's a big problem, is that I learned indicators first. One of my biggest, if I could go back in time and change things, would be if I could go back, I would have invested more time and more money in getting directly with people who had the skill set and the knowledge versus me spending the first 8 years of my trading and investing trying to figure it all out on my own. I would have went a lot further, a lot sooner if I just tapped in with folks who already knew what the deal was. All right. So let's look at this. All right. With this strategy, we're going to use different tests, same strategy, right? Buying when the 9 costs the 21, exiting based off the 5% and the 2.5, right? So we ended up with a total return on equity minus 0.15, right? We lost $1,000. So if we come in and we adjust this, let's say we do a stop loss of 1%, take profit of 2%, run it, refresh. It's taking a lot more trades. First one, we lost $1,000. Five, four, three, two, bam. This is when we lost, bam, 53,000 out of a million, right? 5% down, not a big deal. 53,000 out of a million, right? So peep the difference in that, and all we did was take a change in a stop loss and a change in the target, right? With the tight stop loss. So what happened? With the tighter stop loss, what it seems like is that we didn't have the room to pull back any. And so we were getting in trades. And that's probably why it took longer to run, because it was running so many trades. We could look at that too. But what it seems like is with the tighter stop loss, even though our profit target was tighter, this is one of those strategies where if you don't allow any wiggle room, it looks like you're going to get screwed. All right. So let's run 2% stop loss. 2% stop loss, 2% take profit. All right. So again, that was the difference between, I think, losing 1,000 and losing 53,000 again on $1 million account. In this example, was that the tighter that stop loss was, it stopped out. And maybe, and we'll test this too, maybe shrinking the profit target caused you to get out of trades that would have carried you further too soon. Right. So this one lost even more. So let's go back. The first one was 2.5 stop loss with the 5% target. So if we do 2.5 and we do a 3% target, right? And so we're getting these different results. And my point being is that the strategy is the same. This strategy is still buying a 921 EMA cross, but the results are different based on how we're managing the money on the trade. All right. So let's do a 1% trailing stop. All right. So let's keep this. I think we had our best result with the 5 target. So we got a 5% target. We got a 1% trailing stop. And our initial stop is going to be this. And this is trading shares. This isn't trading options. This is just trading shares. Right. And this is buying at the end of the day and selling when the criteria is met. Right. So let's run this again. And hopefully this makes it a lot clearer. Oh, now you profiting. We added a trailing stop loss of 1%, right? That's why I like this site, is it explains stuff to you. All right. So the trailing stop, what a trailing stop loss does is it moves your stop loss up as you move up in your profit, right? So if you go, once you start off at 0, you move up, right? It's going to move that stop loss up. You move up some more, it's going to move the stop loss up. You move up some more, it's going to move the stop loss up. You go down, boom, you stopped out, right? So if we come look at these tests for this strategy, right? This is like the biggest takeaway point out of all this stuff. That's all takeaway points, right? Is that the same strategy has completely different results on this portfolio, all based on how you manage the position. And another point that we'll talk about another time is that you can trade under 50% win rate and still be profitable. We're going to talk about that later. It ain't fun, I'll tell you that. It probably ain't the most fun, but you could do it, all right? But that's a big deal because a lot of people force themselves into this thing where they think that win rate is directly correlated to profit, and it is not without another variable. And that variable would be your profit factor, right? Which is also your risk to reward. So your win rate, boom, we finna whip this out. So your win rate can be, let's just do 1%. All right. So your win rate can be 50%, But if you have a 2-to-1 risk to reward ratio, refresh me. Pop, pop. If you have a 2-to-1 risk to reward ratio, you can still be profitable. All right, 5, 2.5. You will be profitable, not you still can. You will be profitable. Right. And so we see that. This is taking out fees. This is money lost, money won, right? 50-50. And it actually just pulls like a random, this is how that would have grown, right? Over 100 trades. You can have a 45% win rate, still be profitable, right? What you don't want to do is have and this isn't fully tested, but we're going to run this. You don't want to have a take profit of 2.5, a stop loss of 5, right? Now you're losing. So this is good, Jordan. This is where so many people mess up because they are cutting their winners so early and not giving their winning trades a chance to keep going. But then when they have a losing trade, they hold it too long out of hoping that it flips, right? And we can talk about sizing as well. That's a whole nother. It's going to be a part 2 to this class. That's that. So you can have winning win rate, right? You win in majority of your trades, but you're still negative, right? Still negative. And that's a hump that so many traders deal with. I was there. Everybody, I feel like there's no escaping that, right? Because it's natural. It's natural, right? We as people, I think there's just something that's proven with psychology. I'm not gonna turn this into a psych lesson, but when you have that win, you like, oh crap, let me get that. I don't want it to go away. But if you're losing, you like, come on, it can turn around. It's gonna be all right, right? Like you don't want to be wrong. You don't want to be wrong so much that it crushes your account, right? And that's not what we're going for. So I'm gonna actually throw a 70 win rate on here. So barring the fees, right? It looks like you need about a 70% win rate to have with a 1-to-2 risk to reward ratio. Sounds backwards to me. But if you're trading like this, where you're letting your losers be twice the size of your winners, which so many people do, you need a 70% win rate to finish profitable. And you profitable, but you ain't making no money, right? So that's something to change. And a simple change can be, even if you just made it 1-to-1, now you're making money, right? So how do you do that? That's, again, looking at the strategies, that's looking at your rules, that's looking at your log, and that's you saying, okay, cool, when I trade the strat and I trade it like this, and I did it for a week, these were my results, right? What goes into your strategy? We need a part 3 of this class, man. Your strategy is not just, you know what? Strategy is good. Most people have an idea of a strategy and not a trading system. That is a problem, right? World is recording, me posted. Same place everything's recorded and posted. In the Discord under recorded classes, right? So the problem is so many people are focused on a strategy that they get a strategy and are lacking any system, right? The system is, it's like driving to the store and just taking whatever turns you see and eventually ending up at the store, right? Like that's just strategy. Strategy is I'm gonna pull out, I'm gonna drive this way, I'm gonna drive that way. System is, I know there's 50 different routes to get to the store. This is the most efficient and time-saving way to get to the store. This is the way that has the least traffic. This is the way that minimizes red lights, right? Again, strategy, there's so many ways I can get to the store. I'm gonna go this way, even though the store is that way. I'm gonna go get on the highway, even though I don't gotta get on the highway. And eventually I'm gonna get there, right? So when it comes to creating your system, right, you need to be looking at not just the entry, not just the exit, look at your sizing, right? We talked about this, and I'm gonna say it again. Your risk on a trade is not the amount of money the trade costs. That is not your risk on the trade. Your risk on your trade is the amount of money that you are allowing yourself to lose prior to an exit. Okay. That is the difference between somebody who can have a trade that goes minus 100% and they lose the entire thing, it goes to zero, and somebody who, and they're cool with that, completely fine with that. Twitter lottos, I had Twitter put lottos, they went to zero. I ain't break a sweat, I ain't shed a tear, I ain't cry, I ain't care, right? Because of my sizing, right? But it's people who get into the trades and you go down 20% and you're freaking the hell out, right? Because you have sized so much that you've reached your risk tolerance threshold with a 20% drawdown, right? So the classic example I give is, if we know as traders that we don't want, and this is something that's across the board, right? You don't want to lose more than 5%, 3%, 4%. You know, it's always up in that range. You don't want to lose more than 4%, 5% of your account on any one trade, right? As traders, you want to make sure that regardless, end of the day, you have positioned yourself where you can trade another trade, trade another day, make it another week, and you're giving yourself more at-bats, more opportunities, more shots to create more success, right? So if you have a $1,000 account, 5% of $1,000 is $50, right? If you have a $1,000 account and you put on a trade that costs $1,000, your stop loss is 5%. If that trade goes down at all, if that trade consolidates for 10 minutes, you out, right? So you're not only out at 5%, right? That's going to show you like how we just look at that back test that we had the tighter stop loss on and how that one lost the most money because there wasn't any room. Not that the strategy was bad, there wasn't any room for any pullback without us getting pulled out, right? So if you have a $1,000 account and you like, hey, no matter what, I'm not losing more than 5% on my trade, on my account, on any trade, you take a $1,000 trade, your stop loss is 5%. Boom, you out, right? If you took a trade that was a $100 trade, you could go 50% into drawdown and still be within your risk parameters, right? And so what I'm not saying that you should go down 50%, right, on trades. What I'm saying is you need to position yourself where when you're taking these trades, if it's a swing, right, you know swings are going to swing. You can get in a swing, it go up, it go down, it go up, it go down, whatever, and then it goes back the direction you want it to go, all right? If that happens, you don't want to be getting out just because you're down 20%. Just like we said before with the bull flag, right? If it's a bull flag, I'm in calls and it starts going down and consolidating because that's how a bull flag does. I don't want to be having to get out minus 10%, minus 20% because it's bull flag. It's bull flagging. All right, cool. It's about to break out to the upside. I'm good, right? So that allows you to have that wiggle room where you're not freaking out about that, right? And that's man, that's why so many people blow so many accounts. And not to say like I've never blown an account before, I have, right? But to prevent yourself from blowing accounts is, if I know I don't want to lose 5% of my account, or more than 5% of my account on a trade with my $1,000 account, I'm taking a trade that cost me $100, right? And that way, if I go down 20%, not because my price, my P&L says so, but if the price action shows me that my trade was wrong, I can get out and I'm cool. I'm not sweating, right? When I'm live trading, whether it's been with the whole Discord, whether it's been with just a small group, boot camp, mentorship, whatever, everybody always says that whether I'm up or I'm down, and I'll be down 30%, and then it flips and I'm up 50%. If Jordan, you know you're down 30%. I mean, the candle look like that. Okay, right? The reason I'm so calm, aside from the confidence in the trade, is because although the percentage might seem large, the capital in relation to my account is small. And that's how I can trade price action and not trade my P&L and be fine. Is because if you have a $1,000 account and you're taking $100, you're taking $50 trades, right? And your account risk management is I can't lose more than 5%. You can lose the entire trade. The entire trade can go to zero. And you're like, well, that was 5%. I mean, that's my risk. All right. But what are the odds that you're going to go down 100% on multiple trades without price action telling you to get out? Right? Very slim. So that's big, 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 big. One's in the chat. We're going to check again. One's in the chat. This is making sense. Twos, if anything was confusing. And then follow your two with a question. Follow your two with a question. We got ones. Good, good. Again, quick rundown recap, right? Choose a strategy, create a system, choose a strategy, test the strategy, give yourself a chance for the strategy to work. Don't just give it one trade or a day, right? Give yourself ample opportunity to try this thing out and let it work before you drop it off. Adjust it, right? Lauren first told me about Heikin-Ashi candles. I took 2 trades with Heikin-Ashi candles. I lost 2 G's. I said, Lauren, I'm not ever looking at no damn Heikin-Ashi candles ever again. That's because I was trading, using them to enter like she does. Then I looked more into Heikin-Ashi candles, how they work. And I started using Heikin-Ashi candles once I was already in the trade to hold on to the trade longer and let it keep running in my favor. Because Heikin-Ashi candles are going to show you more of a trend. That works. Now I do that regularly, right? So you need to make sure you're doing that, right? Filtering is making sure that when you're filtering out what you're doing, you're not focusing in on this new thing, that new thing, this new strategy, that new strategy. And that's why I didn't talk about strategies heavy on this Zoom, because you all got 20 different strategies floating around in your head. You need to knock 19 of them out. Whatever one you think is going to give you the best chance, run it, see how it goes. All right. Create the log where you're logging these things, taking notes on what you're doing, and you can see, is the problem the strategy or is the problem me? Am I always losing? When I look at my notes of why I lost, was I getting out too early? When I look at my notes on why I won, was I doing everything right? Right? You know, my rule was it needs to be in the uptrend, that support with the bullish candlestick and break above the bullish candlestick. But I didn't wait on that, actually. I got in on a bearish candlestick and then it broke support. And that's why I lost. I lost because I didn't trust my rule, right? So look at those things. And then think about one, like we just looked at the win rate. Win rate isn't the biggest deal of making money, right? You need to make sure that your sizing is appropriate, like we just talked about, and that you're looking at how you're managing when you're taking your profits and when you're cutting your losses, right? If you can't get risk management down, none of these strategies are going to matter. They won't, right? It won't. It'll be like driving a car blind. It don't matter what car you have. If you are blind, you are not going to make it to where you're trying to go, right? It don't matter. So you need to make sure that first and foremost, you are testing with your risk management, and your risk management can go along with the trading strategy. The easiest way to improve your risk management is to take on sizing with your trades. And sizing, like I talked about yesterday or the day before, sizing isn't the amount of contracts you take. Sizing is the amount of capital you put on your trade. If we have contracts that cost $100 and contracts that cost $50, if you buy 10 contracts, and you say your sizing is just 10 contracts regardless, then that means that in some cases you're spending with the same criteria, you're spending twice as much money. So now you're putting up twice as much money as no, that's not your size, that's not your sizing, right? Your sizing is how much money I'm putting up on these trades. And that can be a consistent dollar amount. That can be based on a percentage of your portfolio. That can be based on the strategy itself and your confidence in the strategy, right? Which it shouldn't, but you can. That's just, reality. Is I know this one is looking like this. This one probably ain't gonna work. So I'm a size less, right? Or I'm getting in on a breakout. It's probably gonna pull back, and then it might continue, or it might fail. So I'm gonna go lighter on this one. I'm gonna put less money in, and then if it works out, it works out, or I can add to it as it continues in my favor, right? And focus on the bigger picture. Right? At the end of the day, your goal is your goal. Everybody's goal is different, but some people are the same. You want to focus in and dial into what gives you the best opportunities for success. You want to focus in on that. You want to filter out other things. And then as you continue to develop and new things pop up, you can try them out and see how they integrate with what you already have going on, right? If Kim is talking about Elliott waves, I'm not switching my whole trading style and dropping everything that I've learned over my past 10 years of trading to say, well, damn it, I'm about to trade Elliott waves. And that's it. No, I'm like, okay, Kim is teaching about these Elliott waves. This makes sense. How can I integrate Elliott with what I'm doing to make what I'm doing better? Moody is talking about the strat. I'm not, damn it, everything I've learned all these years out the window, I'm just trading the strat. No. How can I take what is coming right here with this strat? How can I implement it into what I have going on to improve it, right? And it's the same thing, and I said this earlier on the call, is it's the same thing that I do with the Discord, right? And you see that is people are like, hey, I want to join the team. I'm over here doing this. And like I've talked through it, right? We had just stocks and options. I was like, okay, right? Think about it just like a strategy. Okay, cool. Let's add Forex and crypto. And I want people to get a chance to get all this stuff. Cool. I'm bringing in people, paying people to do Forex and crypto. Okay. It's going good. I'm looking at the server analytics. I'm looking at the Zoom classes. All right, our crypto classes, very good classes, great classes. We get 30 people on those. Stock class, same time, same day, we get 80 people on those. Well, might need to make an adjustment, right? And so you make the adjustment, right? It's the same thing with trading. It's the same thing with everything. And people will come in live trading. Hey, bro, I do live trade. Jay do pre-market. Hey, bro, I do pre-market Zoom, da-da-da. I'm not finna switch the whole Discord into just, hey, y'all, we on Jay's time now, right? Can this new thing be implemented and integrated with the current thing and possibly improvement? And then if I take back to trading, but also anything else, if I take this thing on, right, Kim's Elliott wave, I give it my best shot, I'm looking at it, I'm using it, I'm learning it, and I notice that as I'm logging, if I give it a month and I see no change in my results, if I see my results decline, right, and I don't think that they would, right, but for the sake of the example or for anything, then you can throw it out, right? You can drop it. You can come back to it later, And so that's what you do is somebody's talking about EMA, somebody's talking about FIB, somebody talking about strat, somebody talking about RSI, somebody talking about multi-time frame analysis, multi-time frame continuity, blah, 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 all this stuff. Hey, this is my strategy. Let me see if I can add this into the mix. Let me try this out. It helps. That's the bet. Thank you for sharing that. Now I've improved as a trader. It doesn't help. That's a bet. Thank you for sharing that. It doesn't help where I'm currently at, but down the road, I might turn into a completely different trader, right? And that's why you still want to be open to everything, because I never thought I'd be scalping. off a 1 minute chart. And I went like 2 months where I was just scalping off a 1 minute chart. Right. I used to think I was going to be swing trading forever. I was like, I'm not a day trader. I'm not going to be a day trader. I definitely ain't going to be no scalper. Right. But I went from long-term investing to swing trading shares, to swing trading options, to day trading options, to scalping. Like this is still my first year day trading options. And I didn't start scalping till May. Right. But because I've been able to take different things in, even though I'm not using them then, now I'm able to add them to it. So that's it for class. I'm gonna end this recording. I ain't gonna teach for 3 hours, but